This Indian industrial player multiplied its profits 17 times in a decade, with nearly zero debt. And yet it trades at just 18 times earnings. Is Pix Transmissions the quietest wealth compounder in India's mid-cap space? Let's dive into the full research-backed story. Founded in 1981 in Nagpur, Pix Transmissions started as a small belt manufacturer. Today, it's India's leading power transmission belt company, exporting to over 100 countries, including Europe, Middle East, Southeast Asia, and the Americas. Pix is vertically integrated, from rubber compounding to packaging, all done in-house. It follows a make-to-stock and make-to-order model, supported by logistics hubs in Germany, UAE, UK, and the USA. By FY25, exports formed 66% of revenue. In the last 10 years, revenue grew from Rs 224 crore in FY16 to Rs 589 crore in FY25, a CAGR of 11.3%. Net profit surged from Rs 65 crore to Rs 112.9 crore, a 32% CAGR. Operating margins expanded from 17% to 27.5%, peaking at 29.6% in FY21. Pix has optimized costs dramatically. Employee cost as a percent of sales fell from 24.3% to 15.5%. Raw material costs stabilized at 36%. Inventory days improved from 240 to 184, while receivables dropped from 86 to 71 days. From Rs 173 crore to Rs 267 crore in net fixed assets, Pix's capex was slow, steady, and fully funded internally. Warehouses were added globally, and precision automation was installed, all without adding long-term debt. Operating cash flow reached Rs 108 crore in FY25. Free cash flow stayed positive in 9 out of 10 years. With capex to CFO ratio falling below 15% in FY25, Pix now generates strong free cash to fund growth or dividends. Debt fell from Rs 125 crore to just Rs 35 crore in a decade. Return on capital employed is at 23% and ROE is steady at 20%. There has been zero equity dilution. Every rupee earned strengthens existing shareholders. Receivable days dropped from 86 to 71. Inventory days improved by 40. Pix reduced its working capital cycle from 171 to 139 days. A key reason why its cash flows are strong despite export billing cycles. Pix retains over 99.8% of its profits. Dividend payout is symbolic. Rs 12 crore in FY25. This capital reinvestment powers its compounding, aligned with Peaceful Investing's checklist for long-term wealth creation. Promoters own 61.82%, unchanged for 10 years. There's zero pledging, no share dilution, and no preferential allotments. This is rare governance quality for any listed mid-cap. Pix makes industrial and automotive belts, not dozens of unrelated SKUs. Its niche focus enables brand strength. By FY25, 2/3 of revenue comes from global markets, not dependent on Indian cycles. Pix invests in application-specific innovations, like Pix Terminator registered trademark for extreme strength and Pix Expert R, with diagnostic sensors. No outsourcing, no gimmicks, all in-house development through polymer tech and virtual labs. The numbers speak. Pix grew revenue, margins, and cash flows, all while staying debt-free and shareholder-friendly. Capex was efficient. No financial tricks, no related party misuse, and no overpromises. With a PE of 18.8, EV EBITDA of 12.2, and ROCE of 26.7%, Pix looks reasonably priced. Peers with lower fundamentals trade at 25-35x. This creates an undervaluation opportunity, especially for patient investors. Pix passes all 15 points of Peaceful Investing's stock checklist, from self-funded growth to ethical management. It's a textbook case of consistent compounding, built on quality, not hype. Risks include raw material volatility and FX swings, but upside lies in automation, new OEM clients, and premium belt variants. With a 20-24% margin profile, Pix is entering its next phase of global scaling. A zero-debt, export-led niche player with expanding margins and clean governance. Pix Transmissions is everything a long-term investor should love. It doesn't shout, it compounds. This video is for educational purposes only and should not be considered investment advice. Always do your own research before investing. Thanks for watching. Subscribe for more research-backed deep dives.